Everybody, Dave here, Hidden Freedom Investing, and welcome back to the channel. If you're new here, on this channel I talk about dividend investing using options, selling options, cash secured puts, strangles, naked calls, and even naked puts in some cases to generate income, along with real estate notes. Some of my older videos I might talk about rentals and possibly even real estate flips. Trying to get out of that stuff. I'm officially out of rentals, but anyways, in this video, we are going to talk about VYM. It's been 6 months since I've deployed a strategy using VYM, and I kind of want to do an update on it. How's it working out? Do I have any regrets? Is there anything that I would like to change, or what's the plans going forward with VYM? And we're talking about Vanguard VYM, the high dividend yield ETF from Vanguard. It's a very superior product. It's very cheap to own as well, and it performs pretty good. So let's go ahead and get started. The information expressed in this video is my opinion and my opinion only. This information is for entertainment purposes only. Please do your own research. All right, we're looking at my dividend portfolio here, just the overview page if you're new to my channel. I hit two new milestones today, $1.6 million and $400,000 for the dividend portfolio. I didn't expect that week to be crazy and be up this week. I actually thought it was going to be down, especially with the government not being split. I thought it would be down, but that wasn't the case. So let's go ahead and look at the current portfolio here. So we are looking at my dividend portfolio. If you haven't seen some of my dividend portfolio update videos, you can take a look at that up here. And I talk about all the dividend stocks, all the dividends that I receive and all that stuff. But in this video, we're really going to focus on VYM here. Down at the bottom, it is the largest holding in the dividend portfolio. I have over 1,375 shares total combined in two different accounts, all right, taxable and untaxed deferred. And right now there is roughly about $129,000, and if I can scroll this thing over, $129,000 in VYM, and then all the rest of the stocks here, the individual holdings, make up the rest amount to equal $400,000. At this time, VYM makes about $4,000 in annual dividends, all right, and I'm also up 12% for a total capital gain of $14,000. I've been in this position roughly about 6 months now, and I'm pretty happy with the progress so far. Let's scroll over to the right here and take a look at a couple of the key things to note here. Annual dividend yield about 3.18%, and we also have a 5-year dividend CAGR about 8.29. I need to check to see if that needs to be updated, and just, because it probably got lowered is my guess. Everything else got lowered, so and my yield of cost is about 3.6%. Consecutive dividend increases about 10 years, and I believe the inception date on this is 2006, so it was probably had some trouble during the financial crisis. So back when before I even selected the VYM, Vanguard VYM, I looked at these three here, okay? So I looked at the BlackRock DGRO, I looked at the Charles Schwab SCHD. Those are very popular dividend ETFs as well. So I compared the Vanguard VYM to those other two, and VYM won out for me for what I was trying to do. I wanted to sell covered calls against it, but that's not to say that the other two ETFs are not good or anything like that. DGRO, actually, matter of fact, is a really good ETF. 421 holdings in there. It actually outperforms VYM in some cases, but we're going to talk about that here in a second, because that's actually one thing to note, especially about VYM. We're not going to talk about Charles Schwab SCHD in this video. So here we're looking at FinViz, and we're looking at the VYM, and this is basically not quite a yearly chart, but if we went to a monthly here, we can kind of look at the performance over the last several years here, and down in the pandemic of last year, and then we're all the way back up to basically the highs of this particular ETF. But one thing we want to note here is year-to-date performance so far is 2.73% on this particular ETF. If we compare that to, say, DGRO, let's type that in, and we scroll down here, DGRO is only up 1.72%. So now last year, the actual overall performance of DGRO outperformed the Vanguard's VYM pretty significantly, I would say. And there's a specific reason for that. The main reason for that is VYM is missing some key stocks out of it, whereas DGRO has some key stocks in it. And some of those key stocks here, if we go back to my dividend portfolio and scroll down, in my particular portfolio, these 5 stocks are not in VYM. All right, so Starbucks, Home Depot, Realty Income, Apple, and Microsoft. So that's one reason why VYM had a hard time performing last year compared to DGRO. Now, all these 5 stocks here are in my dividend portfolio up here all individually, so I'm not worried about that. So if you want a little bit more diversification, DGRO might be a better choice, and it just didn't meet the goals that I needed. And if you can take a look at that other video that I did, that talks about exactly the reason why I didn't pick that one, but it's still a good ETF, don't get me wrong. So why is VYM outperforming DGRO? Well, the reason for that is because those 5 stocks there are not in VYM and they're in DGRO. Well, guess what? Apple and Microsoft and NASDAQ in general has had issues for this whole week. And that's the reason why VYM is outperforming DGRO at this time. Now, obviously, if the NASDAQ comes back up, it might be possible that the DGRO will outperform VYM. Do you use a dividend paying ETF in your portfolio? Go ahead and like and subscribe and hit that bell notification. So what was one of the reasons why I picked VYM to begin with? One of those reasons was to get out of some of the individual positions and try to just consolidate those down to one ETF that I can just sell covered calls against. So I've done quite a bit of covered calls against VYM. So let's go and take a look here at the 2020 options activity. And we'll just filter this by VYM here. So let's just do Z to A. And there's all the VYMs there. So these are all the VYMs that I sold cover calls last year, and we generated roughly about $14 from that in P&L, $117 from that one, $129 from that one, and $135 from that one. And obviously that was just a test there. Sold one contract. I probably had 100 shares at the time, and then I increased the shares up to 400. And increase the shares up to 900, increase the shares up to 11. Now I can literally almost sell about 13. And so far it's been working out. There is a little bit of trouble that I've been running into. The biggest issue I've been finding is I just can't go high enough in the strike to get any decent premium out of it. I mean, even here was 15% probability in the money. And, it wasn't, obviously, none of these have been in the money yet. So I've been lucky there, but it's just been tough to get a strike high enough that I can get some premium, a decent premium for it. So that is a little bit of a thing that I didn't think I would run into. So sometimes I actually have to go out further than the 28 or 30 something days and maybe out to the dollar strikes if I can, which means, the 91s, the 92s, the 93s, the 94s, the 95s, the 96s, because some months it skips by $5. And I just, if I went up to like the 100 or something like that, it's just not worth anything. So that is something I've been running into. And right now I do have one open. So let's go ahead and look at my options for VYM now. This is for 2021. There's VYM right there. And we sold a 15 probability in the money, 15% probability in the money. And that was $89.50 when I opened it up. I sold 12 contracts for 35 cents each. And for a total of $412. That's good money. Now granted, that's 60 days. That's double what I normally want to do. Normally I try to stick around the monthlies, so the 30-day DTE. And the problem that I ran into is I just didn't have any variety in the strikes, so I went out 60 days where I had a little bit more variety. And I ended up going with a 95. And the thing with that is that was a $5 move, which was about a 6%. I'd have to go back and look. It was about a 6% move in VYM. And here we are, it's got 43 days left on it, and it's literally 1% from being in the money already. So I'm a little worried about it. Worst comes to worst, I'll roll it up. It's not a big deal. I'm still going to be fine. I just, would rather not generate that $14,000 capital gain. So we'll just control it. We'll roll it out if we need to. But it's something to think about going forward as well. I may just have to get a little bit more conservative on it, which means the income will come down a little bit. Still annualized, that's about 2.2%. So if I'm around 1.5, I'm pretty happy. So I'll let you know the status on that. If I have to roll it or something, I'll probably make a video on it because I've never really made a video on rolling a option in Schwab before, so I'll make a video on that. I've done one for Interactive Brokers, but never for Schwab. So pretty happy so far, but you know, still 43 days left. If we have any market incline or something like that, hopefully it doesn't run too much. It might be tough to get above it if I need to. I might have to go out a couple of months or something like that. But so what's the plans for VYM and my dividend portfolio? I do plan on building this portfolio out to about $1 million, and we're about what, $589,000 left. A lot of that's going to depend on real estate notes when that gets paid back, options income, and other things as well. Right now, I want to build up VYM. There's plans to build up to about $700,000 to $750,000, and the rest will all go into these individual stocks up here. So that's just the plans right now. That'll probably put me about what, 80 contracts or so, something like that. That's pretty good money. You know, that's another 1.5 to 2% added to the yield that VYM already pays. Is pretty darn good. So that's the plans for VYM. We'll build it up to about $700,000 to $750,000. You know, sell covered calls against those 80 contracts. Yeah, that'll be quite a bit of money in commissions, but you know, we're still generating more capital off of it, so that's not a big deal. There had been a couple of people in previous videos talking about comments saying they couldn't get fills. The fills, you know, were terrible, or the spread was too much. And honestly, I haven't really run into that. Maybe you're just used to, you know, like a 5-cent spread or something like that. I mean, I trade options all day long, all week long, and I mean, every stock has a spread. Sometimes they're $1, you know, sometimes they're $2. So, I mean, I just haven't not run into that issue on VYM specifically. Maybe there's other dividend paying ETFs out there that are a better choice, but honestly, I've not run into that, so that's not an issue for me. So that's the plans for my dividend portfolio going forward. We'll keep building out VYM. We'll keep selling covered calls against it. If anything changes, anything, you know, and notice anything else or something like that, I will go ahead and make an update video. I'm curious to know, you know, what you're doing. You know, do you have a dividend paying ETF, and which one? Leave a comment below. Hope everybody had a great holiday, and we'll end this video here. If you have any comments, questions, or concerns, go ahead and leave a comment below. Hit me up on Instagram, Twitter, or email. And until next time, go ahead and like and subscribe. We'll see you next video. Thanks for watching.